Welcome to a smart and short update on the markets on this Sunday morning, in which we're seeing that the markets are pretty much doing quite fine. Before we're going to continue with this short update, please do not forget to subscribe to this YouTube channel, like this YouTube update, and check out my Twitter and Instagram where you can find daily content. Also, we've got a discount going on right now as Bitcoin has hit a new all-time high. And the all-time high is 67k, through which we're doing a 67% discount on your first month if you become a member or today or tomorrow with our group called 8. How does it work? You go to the website, you click on the button here, and then you type in the coupon code trade with 867k, apply coupon, and you get a 67% discount on your first month. So that is something that's very interesting for you. I think there's lots of opportunities with trading going on in the coming period, through which using this as an opportunity for yourself to establish a proper portfolio, but also to copy paste me or to trade alongside the other traders that we have in the group, producing daily content. I think it's a great chance for you. So do not forget to use this opportunity to become a member. Looking at the markets, I think we're just seeing a slight corrective move, but if we are really looking into the fact why we are getting this corrective move, it actually makes sense. We took out the previous high, which is the yearly it's actually the all-time high of Bitcoin, and by taking out that all-time high, we've also come to the conclusion that we get close towards the 1.618 Fibonacci level. And then second, what we've also been seeing in the previous touch of the all-time high of 2017 is that people will be using that level as a reference point to start taking profits. It's basically the only take profit level that's left in the market, so it makes sense that we're getting such a corrective move after that because of that fact. It's the same as when people are going to sell at round numbers, so 50k, 75k, 100k. They are reference points for people to start taking profits. However, what most likely is going to happen inside this cycle is that people are not going to be into the markets as they expect a drop to be heavier than what it's actually been taking, just like what we've seen at 25k or at least at 29k, where people were expecting 25k to be happening. The other way around, people will still be in the markets, expecting the markets to run further while the actual bear market takes place. So it's going to be a very volatile and interesting period. I think the explosion of the cryptocurrency markets will be taking place heavily. And through that, such an upwards run will have some corrective moves, right? So when we're looking back at the actual structure of the markets, we've made those levels here at 68k. Preferably, I'd love to see some more consolidation happening. I just don't want to see a straight up vertical candle happening with Bitcoin at this stage, as I assume that this cycle will take longer than the previous one. However, crucial levels that we're looking at to sustain support on, it didn't really change. We've had this we've had this run to 68k, and we've already established those green lines here, which are previous resistances that have to become support in order to sustain the market structure. So even if we drop to 52 to 54k, it still makes sense to have a wick there to go to the bottom of the range, but preferably I don't want to see it happen towards 52k, and I just want to see it hold up above this green zone, given the fact that this one was the final hurdle before we started to break out heavily. So in order to have the upwards continuation taking place here, I think we just want to sustain above that and just go sideways for a little bit in this structure before the actual breakout towards 90k will take place at a little later stage. Also, based on this entire run, the Fibonacci extension tool will give you some important levels to watch, and based on that figure, we can see that anything around 57 and also around 53.5 are levels that you should be looking at if you want to see any support happening. So I think if you're getting into the markets, or if you want to get into the markets, these corrections that we're getting right now are actually providing you opportunities to get into those markets that you really wanted to. And really, usually the markets are not giving you many, but right now we're seeing some. Looking at where the price is going to open up from the CME Futures chart, we see that we're currently at 61.1 or close to that. So usually what will happen on Sunday is that every move around that number, or if we get to like 62k on Sunday, it usually crashes towards the level of 61k to close up the gap that's being opened on a Sunday evening when the new weekly candle opens or the trading starts again on the CME Futures. But overall, I'm assuming that after that we're just going to continue moving with the market as a standard point here. Total market cap also breaking up once again. We're seeing that we're showing some strength here, trying to break above the all-time high. What is the level that I preferably want to see holding with the total market cap? Well, we can see that we're flipping levels for support. So we've had a corrective move which was harsh after going all the way towards 2.5 trillion. And that retested the 1.75 trillion level here. Big run since. And as you can see, every previous level gets a test before we continue moving. So preferably, what I want to see sustain is the entire region around 2.2 trillion. This is the zone that I want to see sustain. If that is going to take place, we are most likely going to see a continuation happening in which the next target zone for the market cap is 3.5 trillion overall. That is the next TP zone, or that's the next Fibonacci extension zone based on this entire corrective move. So what is the actual conclusion of this small update? I think you're looking for buy the dips at this stage still. The upside is still relatively big. The downside is relatively small, I assume, if we hold crucial levels. And it's very easy to validate your strategy through placing stops beneath those levels. So the risk is relatively limited by longing still, but your horizon should be 3 to 6 months from here. And then I think you should be closing mostly of your positions. I hope you have enjoyed this update. Don't forget to subscribe. Don't forget to become a member of our group. And I'll be back tomorrow with 2 fresh new updates. Stay tuned.